Hi everyone, my name is Mark Quinn. I'm a tax advisor and chartered financial planner living and working in Portugal, and I help expats relocate here from a tax and financial planning perspective. Just a very quick video based on an email question I received from a gentleman earlier in the week, asking the question, is he allowed to keep his fixed term deposits? In this case it was with Nationwide. It's a common question I'm asked, more general banking questions, am I allowed to keep my UK bank account? Now, there's no issue as such in keeping UK bank accounts. It's more of an institutional decision. So each banking or financial institution will have its own rules. Post-Brexit, do they want to continue dealing with and handling accounts for non-UK tax residents? And some have chosen to take a very strict stance and write to customers saying you can no longer hold an account with them. Others have been a lot more flexible. So it's an institutional rule. So there's nothing wrong in holding it as long as the institution's happy. The issue you might have is opening new bank accounts, which could be an issue because in many cases you're making the declaration that you're a UK tax resident, which if you're living and a tax resident in Portugal is obviously not true. So obviously you can't do that. But in those cases where you want to keep, for some reason, say a UK sterling denominated account, there are options. So the first one would be to use a crown dependency like Guernsey, Jersey, Isle of Man. All of those can continue to deal with non-UK residents and allow you to continue to have sterling-based deposits. Now, they are blacklisted from a Portuguese standpoint, so you do have to be aware of that nuance in the sense that they're going to be taxed more punitively at a higher rate of 35% compared to the standard whitelisted tax rate of 28%. So that's one issue. The second option is to use something like national savings and investments. Now, my understanding with NSI, which is basically the government-backed institution offering savings and fixed rate bonds, historically you couldn't use them as a non-resident, but several years ago they changed the rules so you can actually use them still. They offer quite good rates if you're holding cash, and of course they offer premium bonds as well. Be aware, however, that premium bonds are considered lottery winnings in Portugal and will be taxed. So that's the second option, NSI. And the third option is using a sterling denominated bank account in Portugal. Not many people are aware that some bank accounts down here allow you to hold euros, but also have a sterling account running alongside each other. Now, if you're a tax resident in Portugal, it would be subject to 28% tax, irrespective. If you've got NHR status, it might not be as good as the other options because it's based inside of Portugal. It's always going to be subject to 28% tax, whereas if it's in NSI, for example, there'd be no tax in the UK and no tax here in Portugal either, because of the nuance of the double taxation treaty between the UK and Portugal. You get away with tax-free interest at both ends. The nuance there is that in order to have that, you need to claim what's called disregarded income treatment, and that means that you sacrifice your basic personal allowance in the UK in order to get the tax-free interest and, if relevant, dividends over here as a non-habitual resident. So I hope that helps. Obviously not an advisory video, just for information only, but I hope you find the question and answers that I get from clients and potential new clients useful.